So how did I make $2,272 trading Google put options? So looking at Google on June 2nd, 1430 at 1430. 1430, let's see. This candle right here. So I played put options on Google yesterday. As soon as it approached the 9-day moving average, waited for a rejection. That did not happen. Moving on to the next day at 10:56, which is 56, this one, but this candle right here, the 11 candle. So I sold close to the closing time of the candle, and when I sold out the position, I made an easy gain of $2,272 just trading a couple of Google put options. So this trade by all means was I guess you could say it was easy in a way. And basically what I did for this specific position is that I only invested a little bit of money just in case whatever happened, I could cut my losses if it was if it reached the 10% threshold of being down or 20% threshold of being down, and that way I could just cut the losses there at those thresholds, move on to the next trade, and try to aim for a higher percent target. And so basically ways that you can use the moving averages to get in, right? So for example, take a look at the so when did I get in? 1430. So when I got into Google put options yesterday at 1430, which is this candle right here, basically I played it, nothing is safe, but this is the way how I did it in my mind. So basically I waited for Google to approach the 9-day moving average, wait for a rejection, and that obviously didn't happen. But the next candle did have trouble also as well, breaking the 9-day moving average. In my head, I'm like, okay, this might be the time where Google could get rejected and probably see a big, huge move towards the downside towards the end of the day. That didn't happen. So basically, the next candle broke above the 9-day moving average. And I was like, okay, let's see if this momentum can carry on to the next day. Did that happen? It did not happen. Basically, the in the pre-market, Google was trying its best to break above that 50-day moving average, and it had trouble, and it just got rejected by it. And then in the pre-market, Google was under the 20 and 9-day moving average. It looks like it tried breaking the 20-day moving average on the 9 candle of the pre-market, and it completely failed. And then you can see this big candle, the 10 candle, tried breaking the 9-day moving average, totally got rejected by it. And so when I sold out at 10:56, which is 10:56, which is this candle right here, basically I sold out the position at the 11 candle, and that's how basically I made $2,272. I was getting a little cocky because I was like, okay, maybe I can see more downside happening, but in my mind I was like, okay, I think this is time to move on to the next trade, and just take the gain. Don't be too cocky. What I feel like what most traders do is when they start trading, and they see that their position is up, 40%, 50%, 60%, 70%, etc. They hope for the best and try to, basically they try to hope for the best and see if that position can go a little more higher and higher. That's usually never the case. In that case, you're just at that point just gambling. So basically, you just have to mentalize your gains that you want to aim for that day. So if you're trying to aim for a 10, 20, 30, 40% gainer, for that day, try to mentalize that percent gainer in your head. That way, when it reaches it, you sell out the position and just move on to the next trade. You also have to mentalize when things aren't looking your way correctly. You have to know when to cut your losses. If you don't know when to cut your losses, at that point, you're just basically begging to just lose money at this point. You have to mentalize your, where to cut your losses. I feel like once you kind of get the hang of, okay, maybe my trade isn't going my way like I thought it would, I'm just gonna have to cut my losses at once the position is down either 10, 20, 30%, whatever you're comfortable with, wherever you're comfortable with cutting your losses at. You have to put that in your mind. You have to mentalize that. And same with, when you're up by a lot. So if you're up by 5, 10, 15, 20, 30, 40%, have that in mind. That way, when it's time to sell out the position, it's time to sell out the position. Don't just hope for the best and be like, well, the chart isn't looking so good my way. Yeah, it's not looking so good, but I'm just going to hope for the best and be like, just see if, my options can go up even further. That's just, in a way, you're just basically gambling away your money. So basically try to mentalize your percentage targets, try to mentalize your where you should cut your losses at. Me personally, when I'm not feeling confident in a trade, I'll try to usually cut my losses once the position is down 10%. I also try to implement the trends of the market. Basically, I'll do that by analyzing the moving averages. You can, implement these moving averages to your charts if you like. I use the 9, 20, 50, 180, and 200-day moving average. So, for example, today on Google's chart, on the 30-minute time chart, I analyzed the trend. I was like, okay, it's pretty much looking bearish for Google today, considering that the 50, 20, and 9-day moving average are under the 180 and 200-day moving average. So it's probably going to stay like this for pretty much the whole day. I don't think that we can see any reversal towards the upside for today. So that was, how I analyzed the chart. Basically, once you get the hang of mentalizing when to sell out your position and when to cut your losses, and once you kind of get the hang of how to use the moving averages as your entry points and your exit points, you'll be good. So probably, try your best to try to enter into little small positions. Don't risk a lot of money, obviously, and just practice makes perfect. So as always, this is not financial advice. As always, take care. And if you guys want to sign up with Webull, you can sign up with my Webull link located in the description below or in my IG bio. So that's pretty much it. I'll see you guys in the next video. As always, take care. Bye.